Investing in passive income streams is one of the best ways to achieve financial freedom and security, even as a beginner. And the good thing about passive income is that you'll be making additional income with little or no effort after your initial investment. Once you have set up a passive income stream, it continues to generate money for you without. But before I start the conversation today, please subscribe to the channel so you'll be notified whenever I post another video like this in future. Now, let us discuss the 3 smart investment options that you can start with just 10,000 naira. I implore you to watch this video to the end because the last investment is a new one that many people don't know yet. So the first investment I will be talking about is mutual funds. A mutual fund is a type of investment vehicle where money from many investors are pooled together and then managed by the mutual fund manager. The manager uses the pool funds to invest in a variety of assets like stocks, bonds, and money market instruments. When you invest in a mutual fund, you are getting the benefit of diversification without having to make the decision yourself. Essentially, you are buying into a broad portfolio managed by experts. So why should you consider mutual funds? You should consider mutual funds because your money is spread across different types of investments, and this reduces your risks, and you get the advantage of using experienced fund managers who do all the heavy lifting so you don't have to. Another reason is that you don't need millions to start. With just 5,000 naira, you can start investing in mutual funds. Now, let's get into how you can actually invest in a mutual fund in Nigeria. The first thing you need to do is to choose a mutual fund manager. Some popular mutual fund managers in Nigeria include Stanbic IBTC, ARM, FBN Quest, United Capital, and Meristem. You can find more information on their website about the specific funds they offer, including their performance history, investment strategy, and fees. Take your time to research the funds and pick the one that fits your financial goals. Next, you will need to open an investment account with the fund manager you have chosen. This can be done online. You'll be asked to provide basic information like your bank verification number, proof of identification, and sometimes a utility bill. Opening an account is quick and easy, and you can even do it on your mobile phone in most cases. Once your account is set up, it is time to fund it. And the good thing is that you can invest with just 10,000 naira, and you can transfer the money directly from your bank using your bank transfer, mobile banking, or even visiting the fund manager's office. Once your funds are deposited, your money is pooled with that of other investors and invested in a range of assets. Immediately you start investing, you can track the performance of your mutual fund through the fund manager's app or on their online portal. This will give you insight into how your investment is growing over time. Remember that mutual funds are designed for long term, so it is important that to be patient and not to worry much about short-term fluctuations. If you ever need to withdraw your money, the process is pretty simple. You can redeem your mutual fund units by logging into your account and submitting a withdrawal request. The money will be sent to your bank account, usually within 2 to 5 working days. Keep in mind that some mutual funds may have minimum holding periods. This is the minimum period you have to leave your money with the fund manager so they can do some trading on your behalf, and there might be fees for early withdrawal. So always check the fund terms before investing. Thank you for staying with me. I believe you are finding value. Please subscribe to the channel. The second investment I will be talking about is high yield savings account. A high yield savings account is a special type of savings account that offers a higher interest rate than a normal savings account. This means that when you put your money in a high yield savings account, your money grows faster while you do nothing extra. Think about it this way. Instead of leaving your money sitting idle in an account earning very little, a high yield savings account will help you put your money to work, earning much more in interest over time. Now let's talk about the key benefits of investing in a high yield savings account in Nigeria. The first and most obvious benefit is higher interest rates. Instead of earning the usual 5 to 8% you would get with a regular savings account, you will be earning higher interest between 10 to 20% depending on the bank or digital platform. Over time, this can make a huge difference in how fast your savings grow. Unlike stocks, high-yield savings accounts are low-risk investments. Your principal is safe and you will earn steady interest on it. Plus, most banks in Nigeria are insured by the NDIC, right? So this guarantees your money up to a certain amount. One of the hidden superpowers of high-yield savings accounts is compound interest. This means that you are not just earning interest on your initial deposit, but you are also earning interest on the interest you have earned. Over time, this can lead to your savings growing exponentially, and in Nigeria, where inflation can quickly erode the value of your money, investing in a high-yield savings account will shield you from the impact of inflation. Now that you know why a high yield savings account is a smart option, let us talk about how you can actually get started. First, you need to do your research. Not all banks or platforms offer high yield savings accounts in Nigeria, and the interest rates can actually vary. Popular options include digital banks like PalmPay, Alert by Wema, Kuda Bank, Opay, and even traditional banks like Access Bank and GT Bank. For instance, PalmPay offers 20% interest on their high yield savings account. Kuda offers 15% and Alert by Wema offers 10%. Ensure to check their rates, minimum balance requirements, and fees. You want to make sure you are getting the best deal for your savings. Once you have researched the options, choose the account that works best for you. If you are looking for flexibility, you might want a high yield savings account that does not lock up your money for too long. Some accounts require that you leave your money for a minimum of 1 month, some 3 months. Some also gives you a limit of number on the times you can actually withdraw from the account in a year. What I have noticed is that the longer the time you cannot touch your money, the more the returns on it. But if you are investing for something long term and you don't need immediate access to your funds, you could opt for the one with higher rates but limited withdrawals. Most high yield savings accounts in Nigeria can be opened online or via a mobile app, but you will need your BVN, a valid ID like your national ID card or a driver's license, and a proof of address. This process is usually fast and straightforward, taking just a few minutes. After opening your account, deposit your money. You can either make a one-time large deposit or set automatic transfers from your primary bank account. This way, you are consistently growing your savings without even thinking about it. Once your account is set up and funded, regularly monitor your savings. Most banks allow you to check your balance and interest earnings via their mobile apps. Keep an eye on changes in the interest rates and don't hesitate to move your money if you find a better deal elsewhere. Whenever you earn interest, reinvest it back into the account instead of withdrawing it. This way, you'll be maximizing your earnings through the power of compound interest. Set up automatic transfers from your main bank account into your high yield savings account. This helps you to build the habit of saving consistently, even if it's a small amount each month. Interest rates can change over time, so make sure you keep an eye on what other banks or platforms are offering. If you find a better rate elsewhere, don't be afraid to move your savings to a different account. High yield savings accounts are one of the easiest and safest ways to grow your money in Nigeria. With higher interest rates, easy access to your funds, the security of NDIC, it's a smart move for anyone looking to get the most out of their savings. Peer-to-peer lending is the third smart investment option which I specially reserved for the last. If you have heard about this before, please share your experience with me in the comment section. But if you are hearing about peer-to-peer lending for the first time, please pay attention as we talk about it. Certain fintech companies in Nigeria are providing platforms for peer-to-peer lending, and it's a way for you to lend money directly to individuals or small businesses without going through the traditional banks. Basically, you're acting as a mini bank, but through the platform of a fintech company providing the peer-to-peer lending services. Think of it like this. Instead of a borrower going to a big bank like Zenith Bank or Access Bank, the borrower can borrow directly from you through the online platform. It's like giving a loan to a family or friend, but this time to a stranger on the internet. The best part is that you can earn interest on the money you lend. Peer-to-peer platforms in Nigeria like Kia, Paylater, and Sycamore make this possible by connecting lenders, that is you, with borrowers who need short-term loans. You can set the amount you want to lend and the platform handles the rest. Now, why should you consider peer-to-peer lending as a way of investing your money? Firstly, peer-to-peer lending typically offers higher returns than what you would get from a regular savings account or even a fixed deposit account. Depending on the platform, you could earn between 10% to 25% in interest annually. That's much better than leaving your money sitting in a regular bank account, right? One of the coolest things about peer-to-peer lending is that you don't need a lot of money to start. Some platforms allow you to start with as little as 10,000 naira, making it accessible for almost anyone looking to dip their toes into investing. Once you have lent the money, you sit back and start earning passive income because borrowers will repay their loans and they will repay it with interest. It's a great way to generate regular cash flow without doing much work. Peer-to-peer lending offers you a chance to diversify your investment portfolio. So instead of putting all your money into stocks and real estate, lending allows you to spread your risks by investing in small loans. Another benefit is that your money is actually helping others. You are providing loans to small businesses and individuals who may not have access to traditional banking services. So not only are you earning interest, but you are also making a positive impact on the economy. Now that you know exactly what peer-to-peer lending is, let us go into how you can actually get started. First, you need to select a platform. In Nigeria, we have some options like Kia, Paylater, and Sycamore. Do a bit of research on any platform you choose and compare the interest rates, the loan terms, and the borrower vetting process. Most of the peer-to-peer platforms offer between 10 to 25% interest. Make sure to choose a platform that aligns with your investment goals and risk tolerance. Some platforms cater to high risk, high reward loans, while others are more conservative. Once you have chosen a platform, the next step is to sign up. You will need to create an account to verify your identity. This usually involves providing your bank verification number, a valid ID, and a proof of address. Most platforms will also require you to link your bank account so you can easily transfer funds when you are ready to invest. After your account is set up, it's time to deposit your investment funds. This is where you decide how much you want to lend. Remember, some platforms allow you to start with as little as 10,000 naira, so you don't need the huge amounts to begin. Next, browse through the list of available loans on the platform. You will see details like loan amount, interest rates, loan duration, and the borrower's credit score. Take your time to choose a loan that offers a balance of risks and returns that you are comfortable with. If you are just starting out, I recommend diversifying. Spread your money across multiple loans rather than putting it all into one loan. This way, you minimize the risks of losing all your money, even if one loan goes bad. Once you have funded a loan, the borrower will start making repayments with interest. Most platforms have dashboards where you can actually monitor your earnings in real time. You can reinvest your profits into new loans, allowing your investment to grow through compounding. To maximize your returns and minimize your risks, I advise that you diversify your loan. Don't put all your money into one loan. Spread your investments across different borrowers to reduce the risks of losing your capital if one borrower defaults. You can also reinvest your interest into the platform into new loans, right? This way, you can take advantage of compound interest, which helps grow your investment faster. Most platforms offer credit scores or risk assessment for borrowers. Pay attention to these ratings. Higher risk loans may offer higher returns, but it comes with a greater chance of default. Lastly, keep an eye on any changes on the platform's terms, fees, and interest rates. Thank you guys for watching. I believe you have already subscribed. Please don't forget to like this video and then tell me which of the options you'll be considering. And if you're already a veteran investor, please share your experience with us in the comment section. See you in my next video. Thank you.